Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the Rational Investors Broiler Chicken Show. We already have an intro, so I don't need to do that again. Let's just see. I'm running OBS on my side here, so if you could just tell me over there on YouTube everything looks fine, we can get the rant going. Stream's current bitrate is lower than recommended bitrate. Oh, well, hopefully I don't cut out. We did run into a bit of problems with my assistant over there running the show from his OBS on the other side of the world. I did notice watching the video back last week, it was very disconnected, but let's see if this works a little bit better. Let's see. Am I still doing my thing? Let's see if YouTube has it. Oh, I don't hear anything over there. Well, I hope I am. Hello, Goose88. Hello, Adam. Hello, DMAC. Oh, I haven't seen DMAC right here for a bit. Chris, I don't know. Can you go over look on YouTube and see if I'm doing this thing right? Just confirm. I can't hear you over how awesome Zcash is. This guy's a met. What's that?
So you're good to go.
All right. I will tell you, in my new life, I will demand that people who interact on our site post setups. I'm not really overly impressed with. Unfortunately, this was a partnership, so I couldn't demand the way I would like this community to interact with each other. But I tell you, in the new year, no more of this just blind shilling crap. Which is kind of interesting because I took the opportunity yesterday to try and demonstrate how you could be bullish of something and hunt setups and be of value to your community and help new people that are in the community learn what setups look like and how to trade them. And ironically enough, that was our market of focus here this week, in that yesterday morning, I saw some interesting commentary with regard to Zcash. And I just took the time yesterday to try and demonstrate. This is, I think, it's kind of hard to see this. I don't know whether we have a link to this or not. But actually, I suppose I could just show you the trading view page. Maybe what I'll do is we've already published this though, haven't we? I don't know. Can you go in and edit that? I don't know whether you can or not. Anyway, here was the trade on TradingView. I'll just give you the link, Chris, and if you feel like doing something with this, cool, awesome. If not, no big deal. Anyway, there's that. If you want to make that linkable. I don't know whether that works or not. But anyway, this was an excellent example of just simply price risk trade. I love 78.6s. So, of course, we had some people in the community who were rather optimistic over this name. I can tell you without a shadow of a doubt, probably the best thing to do is do a third one here so I can just show you without screwing up my database. Or, no, that's probably not the right word. Yeah, I didn't want to have that happen. That was the whole point of leaving that. Let's see if we can go over here. Maybe I disconnect the symbols. Maybe interval. So if I go daily, then we go like that, and then we go like that. Absolutely, without a shadow of a doubt, there is no way in hell I would tell a new person to investing, or somebody who is a little old lady and relatively new at this game, can't touch that with a 10-foot pole. And frankly speaking, I actually wouldn't be surprised if a nice short setup actually formed here. Having said that, of course, traders got to trade and all that. So sort of speaking to the audience, well, if you were uber bullish and you did want to participate, how do you participate? I thought this was a pretty good example. It's maybe a little bit outside the wheelhouse of affordability, the size of the trade that I put on here, but a pretty good example of just simply stepping in at 78.6s, risking to new lows, forcing yourself to take some profits, a fairly healthy portion of the position, and then who knows what the hell's going to happen. Maybe circle jerkers and all that kind of stuff gap this thing higher first thing tomorrow morning. You've got your risk-free trade on with stops at scratch, and you just let the wind blow you where it may. So that was the market of note this week. I haven't really been doing a heck of a lot of higher time frame positioning because, frankly speaking, I don't see a hell of a lot that I'm really excited about. And if anything, Monday, Wednesday, and Friday, I go through the entire market with regular audience members at TRI. And, it's day after day after day. Ooh, that looks like a good short. Ooh, that looks like that's overextended. Ooh, that looks dangerous. It's like, this is a very, very dangerous market to be playing in. And for like new people to trading, insanely dangerous. In fact, I would even say that if you want to make this really simple on yourself, I don't think many people can listen to this simple advice. But I don't think you should really be coming into the market and really risking your capital if you're new to this game until you actually start hearing the central banksters start to talk about needing to stimulate the economy and needing to step in and support prices. The interesting thing is, of course, a big fan of this liquidity study of late that I will say Julian introduced it to the community, and I've really bought into it. I really like the direction of the conversation around this liquidity issue. Those are the futures. That's not the tab I wanted. And I don't know, maybe it might be getting a little distracting, but it is directly related to crypto. So let's see, where the heck do I have it? Whoop, it's not even going to load. I gotta update this damn browser thing again. It always does this stuff. If I go and tinker with this, I'm probably going to lose the damn page. Fudge. Anyway, you've all seen my liquidity. In fact, actually, I think I have it on my stock market thing here. Where would that be? Over here? Over here? One of these tabs. There we are. This isn't the exhaustive study that I like to produce. And actually, this is kind of weird. Like, what the hell's happened to that data here? I swear, I think I was lamenting with the audience here on Friday about how, hey, where did the data go? So maybe we might not even be able to study this anymore. You can see the repos, they're basically down at the bottom, so they're not trying to support things with repos, that's for sure. Anyway, I would have liked to have shown you, but I don't know whether this liquidity image is going to load here or not under such, tight. I think actually I even tweeted it out, so maybe it's there. Let's see, is this going to load? Thinking. Come on, you. Nope, nothing. What a bitch. Damn it. It's not one thing, it's another. Let's see. I think I have over on that Twitter. So funny in my country. The only way the opposition can get any traction right now. I mean, this Carney guy, fuck, what a crook this guy is. But the only way that they can get any traction is they just put out, oh, Pierre Poilievre is bad. They don't talk about how bad their guy is. Anyway, that was what I had on there before. Sorry. If you're wondering, that guy's sort of the opposition guy in my country right now. Hopefully we can get rid of these damn WEF people. Anyway, I better not open up that can of worms. Let's keep this conversation just maybe strictly crypto if that's possible today. But I wanted to show you that liquidity study, and unfortunately, it just doesn't paint a very pretty picture for us here in the near term. Of course, I guess this is just a bastardized version of that study. So this dark blue line is our liquidity, and oh boy, it's looking troublesome here. What I wanted to show you was the previous peaks and the previous cycles, because they really, really well articulate the message I'm trying to send. And actually, I was quite surprised when the feds basically came out and said, through the sickness, craziness, said, oh yeah, you can have all the money you want. We'll take interest rates to zero. That was literally the moment that the market bottomed. So as long as they're sort of tightening, I think you're actually kind of asking for trouble. Stepping in here and gambling in the market. Ah, damn it, I can't find that stupid image. Darn it. Oh, well, anyway, this is what I was kind of talking about. Just kind of weird. I mean, like this guy here, ETH 10,000, Tom Lee 10,000 ETH, Trump 10,000 ETH, and yet it's not going up, it's going down. Something wrong with that picture. No, I just can't find it. Darn it. And wouldn't it be absolutely fitting if the powers that be got rid of that study? And it was so cool. Nope, I just don't see it. Now I'm wasting time. Darn it. Oh, well. I'll give it one more go. Can this open up? Are you going to open up? Open up, Leo. Come on, baby. Oh, there we go. All right, now what did I call it? I called it just liquidity. Nope. What the heck did I call it? Such an interesting study. But of course, if they wiped out the study, then I'll make this conversation pretty short. That's what it was. This one here. Let's see what we get. Do we get anything? Are you going to give us something? I got all the notes. Hey, yay, it loaded. Isn't that weird how the other one wouldn't? But the study won't load in dark blue. Isn't that odd? Man, what a mess. What have they done here? They've just completely wiped out this data set? Oh, thanks, jerks. Well, what can you do? Anyway, what I found fascinating was this was the point at which the Fed came out and said, oh, yeah, you can have all the money you want. And look how the stock market and Bitcoin just literally went straight up following that event. Then we had another one over here where the Fed came out and said, oh, we'll be somewhat friendly. Bitcoin bottoms, stock market bottoms, and up we go. So unfortunately, we have a top up here. And of course, you can see what our beloved Bitcoin's done. Really sucks how they took away that data set. Jesus, they sure make this game hard on us. That's too bad. That was such a nice study. If anybody happens to know replacement, I guess, for this WTRREGEN, because it does look like, and I think this is the Treasury data, isn't it? So is it the Treasury that they got rid of the data point? So anyway, and now we got flat earthers on the call. Oh God. If it's one thing, it's another. Anyway, I just wasted 5-10 minutes there trying to talk about liquidity with you, and I can't. So sorry about that. Anyway, point was that I think we had a very clear illustration that liquidity is being drained out of the system. And while you're in there speculating, it's a dangerous environment for you folks. Ironically enough, to this day, I do believe that Bitcoin was built by the people who were in charge prior to I guess who was it? Obama took over from George Bush Jr. Not a big surprise. Bitcoin was created in 2008. I think they knew exactly what was going to happen, and this was their avenue to avoid the great resetting. And I think it basically did its job. I mean, going basically nothing to 100 G's. But I also think too that the code of this thing, Bitcoin, I think it was an accident they created the way that they did, in that it does follow along things like that liquidity study. Love to show you it. Fortunately, the powers that be have taken that away. And my very simple 4-year money cycle study. Let's see, I should be able to load that. Oh, but this stupid tab won't load tabs. Ah! I love computers. You know how much they drive me crazy. Let's see if we can go over there. Maybe we can get that one. Will that load? Over here. And for... is this it? Not sure if this is it or not. Survey says pretty pictures, pretty pictures. There's pretty pictures. So here we are here. There's our magic 1.318 or 1.382. 1.318. That's pi 1.314. Anyway. So according to our sine wave for the money cycle, we are coming into some sort of apex here. I think this drags on into the spring. I wouldn't be surprised if this is a scenario where I'm seeing a lot of talking, like what Zcash is doing right here. And then this sort of notion of, this is the weirdest thing. People are all getting excited because they're creating exchange traded funds of these cryptocurrencies. They're calling them crypto treasury, whatever the hells they are. But to all intents and purposes, they're just basically ETFs of these things. So, Zcash seems to be the name du jour. And I wouldn't be surprised if over the next 6 months, you sort of have this sort of rolling revaluation of a lot of these names. And ironically enough, it's not really like they're going to new highs. It's more like they're just... everything that was sort of got bid up in previous cycles is kind of still on its knees. And so these names, all they're doing is they're just revaluating them back up to the face rip levels that we were in previous cycles. I guess we have superseded the previous high here. We've doubled it. So I guess that's not really shocking, I suppose. This is ZEC on Coinbase. I'm sure we could probably get more data if we go back even further on some of these fun ones, like on Binance. Yeah. So interesting how this peak right here, 120, 360. Yeah, that sounds like a little more than a double. So does this thing just really do nothing more than just double its previous peak? Well, the interesting thing is, what did Bitcoin top out last cycle? Wasn't it 60 some odd thousand? And we topped out at like 126 this cycle. So it's really just kind of the same, really. What's fascinating, of course, is the fact that this thing just hasn't doubled, which is, I guess, a bit of a surprise. Everybody's waiting for this thing. Well, yeah, see, 2021. I guess you could make the argument why... if you look at that Zcash, if you look at what Bitcoin did, this thing, I suppose, should top out this cycle 10,000, 11,000, 12,000. But holy crap, that was just the absolute most horrific time for these people to come out and get all bullish about this with this chart looking like this, that looks horrible. So anyway, I do find it amusing that sort of, hey, when is ETH's turn to get going here? So I guess getting back to my original comment here, and what was the peak from last cycle? I guess that was this one, right? So 68, 69, somewhere in there. Got to 128. Well, and if anything, this would also make sense. We might even see new highs here into the spring. If this is some sort of megaphone, who knows? And it actually does hit that double level of the last cycle's peak. That wouldn't shock me. Having said that, though, oh boy, we've done a lot of technical damage here over the past couple weeks. I think that this cycle pivot here was accurate again. So I'm not holding my breath for new highs out of Bitcoin. And ironically enough, if you're a fan of that ICT guy, I think this is one of his setups that's setting up here. And my sort of bastardization of that approach that he has is you just take whatever range happens to be here and watch like a hawk for mountain man tags. So, and actually this does kind of make sense, just brushing up against these old highs. I would be really, really looking for some sort of short setup in here. That's good trade location. Does it dip down and we break to new lows, or does it just dip down, test the lows, and then we put in structure and start to move higher? I don't know. We'll cross that bridge when we come to it. I do think that in the near term, we're getting awfully close to being washed out here. Whether it be things like A, B, C, D harmonics, and I think we just missed that harmonic by like $100 or something. The target here for the bot 93,642, and we traded to 93,731 earlier this morning. Actually 93,730. So, oh yeah, there we are. 97. Why did I say one? Anyway, I don't see any reason why this shouldn't be hit. It would make perfect sense. But what is interesting about this is, we have this higher time frame mountain man level. So that's this image. And quite often, especially when it comes to like futures trading and stuff like that, professionals will just step in off a mountain. We also have these previous lows. You could make the argument that's an institutional fingerprint. That's an institutional fingerprint. Somebody, keep in mind, this is a daily price chart. Somebody said no more down, you go up right through this block here. I think if you're a fan of that ICT guy, I think he calls it like order block or something like that. But one of the best futures traders I ever worked with in my career, Brandon, he went by the name Mountain Man. I affectionately labeled this 61.8 the Mountain Man level because day in, day out, he would trade that like a boss in the crude pits. And it's just, if anything, all this really wants to highlight is, up top, if you believe this is a trading range, right? Top of the range, bottom end of the range. Once we actually start getting down near the bottom end of the range, at least 61.8% of that range, you have a pretty good idea that the professional traders of the world are going to start paying attention. And also, too, this is a mathematical number. It's it's universal. Golden ratio 1.618, 0.618. I'm not sure if that has like a specific name in math world, but it's 1.618, 2.618, 0.618, 3.618 for that matter. I mean, you see them all the time. So, part of the Fibonacci sequence, of course. So the point of the matter here is that we have a measured move, a harmonic, that's painting in this area. We also have institutional order block or institutional fingerprint or whatever the hell you want to call it against these. We have Mountain Man there. And we also have this funny little, it's not really a valid megaphone, but I do kind of like this expanding range wedge. You can see we're right down in that level as well. We also have a minor midpoint Feigenbaum chaos theory, and you can see the next chaos theory levels right in here. So my hunch is there is some sort of short-term pivot around here. And, if you are an aspiring trader, this is what you have to learn. So you have to learn that, those people that are price risk people, well, they just hit levels, right? And I would imagine there's probably higher time frame traders. They're just going to come in and buy good old Brandon 0.618, 94, 236, because it's just what they do. Obviously, if you're a price risk type person, it's a little bit more advanced because you have to understand risk management, risk tolerance, and how are you going to manage that. Certainly not a conversation to get into here today with you, but just understand that there are professionals that are price risk type people, kind of like what I showed you with that ZEC a moment ago. Right? This was a price risk type trade. And that I absolutely love. I don't know where the hell I did it. Did I do it over here? Oh boy. It's this crazy coin. Yeah, right here. Woo-wee. And the irony of it all is that this position, it has no risk in it because basically I put it on price risk level and the stop's at scratch. So if this thing absolutely pukes out, and it definitely does not look very happy right now, well, so what? You get stopped at scratch on the runner. But anyway, the point here is this is a price risk type trade where I just absolutely love 78.6. So I pulled the trigger there and I was going to risk to new lows. What I guess I'm trying to say here is I think for newer investors, aspiring traders, all that kind of fun talk, price risk trades probably a little bit outside of your wheelhouse, comfortability zone, that kind of thing. And that's where I came up with this concept of licks, where if you are seeking information, well, each letter of this acronym is more information. So the more information that you have that, yes, indeed, this asset does look like it's turning the corner and heading back up, well, theoretically, the less anxiety you're going to have in coming to the market and acting on a daily basis. Because keep in mind, it's one thing to sit and just be a spectator and just, comment. It's quite another to actually be in there risking actual real money on a daily basis with the expectation of actually making money. I mean, they're apples and oranges. And if anything, this is the number one reason and keep in mind, I don't get through to many of my students. I just don't get through to many of them. And I certainly don't get through to a lot of sort of general TRI site members because I think a lot of people that join the site have just not bought into my way of looking at the market. And that's fine. Million different ways to skin the cat. I'm certainly not going to say my way is the only way. But I definitely like the idea that if you're relatively new to this, that you try and create a structure of behavior. In fact, I wrote a very lengthy email to somebody over the weekend, like, what is my job here? Ironically enough, my job is nothing more than try and be a policeman to try and ensure that you are following the process. That's really the only thing that I can really help you all with. And it's because I've been doing this forever. I sleep this stuff. The reload's on. Oh, what? What's going on? I don't think I've ever actually had a dream like that. But that would be funny. Anyway, so if you can buy into this licks principle, then I think it makes risking money in the marketplace a heck of a lot easier. The only problem with this is it takes an absolutely insane amount of patience and discipline. Not easy. This isn't easy whatsoever. And of course, that's half of why a lot of investors fail is they just can't be patient and just let the trade set itself up. Or, I could very easily see price just goes woo like that. And then you sit there and go, oh, fuck me, man. What are your fucking setups, man? You suck, right? Blah, 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 blah. And I would just simply say, well, it didn't set up, so there's just nothing I could do. Um, so I suggest to new people to investing just to try and slow the whole process down. And sometimes in this game, less is more. Be a little bit more disciplined and just waiting for your setups to actually congeal. So, looking at this licks principle, I definitely think we are coming into trade location. Mountain Man, bought take profit objectives, a 1688 chaos fib extension off of the top. Well, you don't see that every day. His market actually, I think, is quite extended to the downside, probably a little overextended. So there's that 1688. There was 8.77. The study that this is measuring off of is this cute little top right up there. So fascinating. That little chaos theory study right there actually projected right down into bot objectives and right down into Mountain Man. Quite stunning. So I like the idea that, and also too, if you go out into the world and you look at sentiment, there's nobody bullish of Bitcoin right now. In fact, what I see on the site right now is a how do you say this? A a focus on names that have rallied, that are pumping. And I would actually make the argument, like something like Zcash here, I would actually make the argument that investors, really the only thing an investor should be doing here is spoon feeding to the market. Maybe you buy into this big W. That's awfully a big W. I mean, maybe that's a better W to work with. So, I mean, I'd be more than happy if site members told me they were long off of these lows. And look at that cute little W right down in there, or even these Ws, right? And so, at what, 150, all right, let's say, I'm just ballparking this. Maybe you're long from 60, I don't know. But boom, there goes a shot. And then 240, there goes another one. And that 500, there goes another one, somewhere up in that area. And you have your next sell order working, I suppose, on this logic, somewhere up around $1,000. And I would actually argue that, like, for conservative investors, most of the people that really watch like YouTube channels, you're probably, well, no, actually, you know what? I'm gonna take that back. How do I say this? The public, they are very excited about this asset right here. But frankly speaking, I don't think anybody in the anybody who's like, I want to teach you how to buy down markets. I want you hunting value. I want you hunting structure. I want you thinking supply and demand. We got no business whatsoever even looking at this thing here. None. As I said, to sort of placate the audience at TRI, I was like, okay, fine. If you really want to get yourself wrapped up in the weeds, all right, let's drill down to lower time frames. But as I said, most of the public, you probably don't have any business even looking at a chart that looks like this. So, this is the market state right now. Now, find me. I mean, I'm more than happy. I mean, keep in mind, I don't want to buy any crypto in here. I'll probably buy maybe next fall. Um, but I've got a pretty big bag of stuff. So if you happen to see something like that, and I happen to be long that name, I'm more than happy to spoon feed into the market. It's just, I think right now, if anything, it's just a waiting game. Does your name, I mean, if it happens to represent value, great. Does your name have some sort of fundamental driver behind it? And this, I think it really got going when the Winkle Dinkles stepped up to the plate and took all of their Facebook money that they made, and pumped this thing. You can see that this has got all of the hallmarks of everything I'd be interested in down here, but here, I don't think so. Anyway, it is what it is. And I think, if anything, this is a perfect analogy of this market state. So enjoy the ride, I suppose. And, I am corrected in that we are substantially higher than the previous cycle highs on this. And honestly, with a lot of these names, I think a lot of them are like crypto names are all sort of sitting down in year. You might find that they just bump along, and one by one, as their sort of fundamental story comes to light of why they're so valuable, you might see this happen over the next 6 months. I could very easily see it. And at the same time, ironically enough, Bitcoin's probably just going to be bumping along here. I think probably what I would be most concerned about is this kind of scenario. I think we're getting rid of the fluffy blow off top of the market, and that's fine. I think it'll probably be a lot of people kind of like this. I remember distinctly here, I was touring through Europe, and everybody was just very comfortable with, oh, Bitcoin's worth $6,000, no big deal. We all get lulled into a false sense of security, and then right into next fall, there's one more punch in the nose, which completely washes the market out into whatever that ultimate cycle low will be. So I could actually see Bitcoin here, on a relative basis. We might not even break down something like this. Our next breakdown might not come until, maybe. It's interesting how Larry Williams, in his cycle analysis study, um, his cycle suggests that Bitcoin hit some sort of bottom first or second week of February, which is kind of interesting. I don't know whether we go straight down into that. I find that a little hard to believe. As I said, I think we're coming into some sort of location here. And I wouldn't be surprised if there's some sort of bounce. But at the same time, too, I don't think that this is, all right, this is the bottom. We go to new highs from here. We got a lot of cleaning up to do in this market. And you can kind of see from like previous horizontal support and resistance. I mean, this is a cute little trend line just drawn off of these two lows. And then off of these lows, I wouldn't be surprised if we actually have to work our way back up into this traffic area. And, kind of that information risk versus price risk. I could very easily see some sort of counter trend rally back up into these highs. Maybe that's when Ethereum does go to 10 Gs. I don't know. But then we waffle around. And of course, the rule is we can't really get bullish here till we actually have a serious W on the other side of this big resistance level. So if there's going to be a rally here over the next little while on Bitcoin, I like something along those lines. I also think, too, that the big fat round number it's relevant because of its relevance. Maybe you'll need time to study this. It wouldn't surprise me if on first blush you just disregard this, but you'd be surprised at how important these big fat round numbers are. So in a weird sort of way, you can kind of see how we sort of dipped into it. Oh, get me out of there. Oh, get me out of there. And I wouldn't be surprised if we actually did a measured move from the big fat round number to whatever that peak was, and then simply projected that range below the big fat round number. And that actually probably becomes our target here on whatever this finest capitulation low is here. I also like from this sort of trade perspective, you can see how momentum here, even though we are making new lows, um, you can see how momentum, let's get rid of all this stuff, is actually still, if I'm not mistaken, I think it's actually still positive here. Yep, we're still positive. So I'm not necessarily saying that there's a trade decision to be made off of whether MACD is positive or negative. But what I am saying is if you think about this Licks principle, I think I've made the case that this is a pretty interesting level here. And then, the Licks principle location, then indicators. I want to see that this market's oversold. And my time-tested Willie Stupid indicator has done its job. I suppose the only thing now is my phone should start ringing off the hook. And actually, it'd be really interesting to see whether any of you YouTubers, are you starting to hear family members call you and start to say things like, you know what, I don't like this Bitcoin anymore. Get me out of here. This was a terrible idea. Because that's exactly what happens when I was a broker. Of course, this is when the phone starts ringing off the hook. Get me out of this thing. It's going to zero. So we have indicators now basically telling us the market is oversold. And the next step, we move along to the C, is we want to see from the indicators confirmation of divergence. And you can see that we will be forming some sort of divergence even now. This would be the difference between what I like to call a potential divergence. So you can definitely see that MACD histogram is not anywhere near these lows. The question ultimately to move on in our Licks process here is we want to see the divergence go from potential to confirmed, where we actually see, holy crap, that indicator's got a big W working, and yet price just keeps making lower lows. So what that implies, though, is that we are going to need a bit of a rally off of these lows, wherever the hell the low comes in, to actually get this MACD histogram to turn back up and confirm this divergence. So it's like, I've gone through this, any long-time watchers, you should sort of be like, oh yeah, this sounds like a broken record. If it's one thing that hopefully I am, it's very consistent from 1 week to the next to the next. And you just keep saying the same things over and over. So I think we can make a conversation. We have L for Licks. Space this out a bit. So we go L, check. We've got indicators oversold. Well, that's a good sign. Check. Now we are waiting on indicators to confirm divergence. So let's put a question mark there. That's where we are. If you can take this approach to hunting trade setups, you'd be surprised how, you just, you want to trade off of a 4-hour, typical swing trader kind of idea. I suppose if you were a bot fan, you could probably have shorted on some sort of failure in here and rode that down, and you're sitting there going, oh, come on, baby. Only $100 to go, right? But the point here is, and what I've basically been saying is, shorters, yeah, you did great. Coming into objectives, they're probably buying to cover those short positions, but I think it's still a little bit early to buy expecting higher prices. So that's been sort of my commentary. And if you were going to sort of walk through a process of how do trades set up, I think we're probably sitting at the C right now. And we have to have that confirmation before we can move on to the S. And that is once the divergence has actually been confirmed, then we just patiently wait for some sort of price structure to help us frame the risk on the trade. And this is just really, really simple. I like those W's, National Association of W Lovers. So maybe I'm going to target, and if we're lucky, you get a W within a W. This makes this game a hell of a lot easier if you get that kind of action. And really, it's just a question of you being patient and disciplined, just waiting for it. And then notice, I like my students to try and shoot for things like 2-to-1 risk reward. And our conversations about how I can't really get bullish up here until I actually get a W on the other side of this trend line to validate that, yes, indeed, this trend line has been accepted above and we want to trend higher. So for me, looking to take profits in there, partial profits like that ZEC, you don't have to sell everything. Put some money in your pocket, get yourself a risk-free trade, and then just have stops at scratch. And then you never know what the hell will happen. But the point here is, oh, what a surprise. If the bottom does come in something along these lines, and I didn't do this on purpose, I just eyeballed this. What a surprise. Take profit just on a revisit of the big fat round number and the POC and this pretty significant trend line that produces a 2-to-1 risk reward. And that's the shit that you're actually, what am I trying to say here? Excuse my French. Got to really try and get rid of the swears. That's what you're here to learn. It's just that simple. But can you? And the problem here is that this could very easily just keep going lower. And then this never does confirm. I've often seen happen, and this is why it's so important to wait for this confirmation. I've often, trust me, too often, seen that these, potential divergences actually turn into new M's, and maybe we come up here and we M out, and it's a whole new sell signal on that failure. So Willie being stupid himself is not enough of a reason for us to get excited. Yes, the market's oversold. Yes, the public is selling, and they're probably selling at terrible prices. But it's not quite enough for us to be like, all right, this is a bull, let's rock and roll. So I still think we're in that correction process, but I think we're getting awfully close to some sort of pivot here. I also talked a lot recently about how we have a November options expiry coming up here. And when we look at the IBIT, I think it also is suggesting that we are very, very close to some sort of pivot here. And if you just look at the distribution of volume on this ETF, you can clearly see where value is on this spectrum. We are way, way below value. And this is just looking at the price action since September. If we look at the entire daily, I think we're banging up against this channel midpoint here. And, you might even want to expand that to that channel. I'm not quite sure. Still humming and hawing about that. If we go off of that channel, maybe we got a little bit more exploration down here. If you're going off of that channel, then I think that we've actually kind of exceeded downside expectations, probably very much like the way this candle did, but you see that we had to rebound right back up to trendline resistance. I wouldn't be surprised. This does feel like it's a little bit overdone to the downside here. Also, too, that ICT guy, I'm not exactly sure how he measures it. I like this setup. I've been playing this game long enough. I can understand the logic of this. This might mean that we actually have to swim around here quite a bit. But I think that these are like his market structure kind of price action. You might find that we do something like up to there, then back to here, and it's like an inverted head and shoulders. That wouldn't surprise me. Um, but the point, I guess, here is that, off of this harmonic A to B, C to D, well, we've already hit that objective. So it is kind of interesting how the ETF has already hit this harmonic objective, and yet Bitcoin itself has not. So does that mean maybe we need one more flush out here to hit this so that the ETF and the Bitcoin itself are in alignment? I kind of think so. Also, too, just really basic, this, I don't know how accurate this is. It might be slightly off, but here's just yet another megaphone kind of line that's saying that, watch for some sort of pivot down in here. So whether it be, things like lick setups, hey, look at that. We got a nice little bottom trying to come in here. This is actually a fantastic example illustration of liquidity pools and liquidity hunts. So you can see how they had this key low here that was put on Friday, and they went and washed that low this morning, and now they're dead cat bouncing it off of that liquidity hunt. A guy I used to work with a million years ago, he was just about to be fired from a prop firm, and the manager said, look, if you can't show me that you can actually place your buy order one tick below that previous low, and do this consistently, then you got no business being at my prop firm. And he forced himself to learn how to buy that low there. And you can see that worked pretty well. The issue here, though, like I said, for new people to trading earlier, is how on earth do you quantify that risk? And, this candle at one point was all the way down here, big red candle. Are you freaking out? Because you don't know what the hell's going to happen. Oh, Beamish guy says it's a bear market. It's going to zero. Can you handle that kind of stress? Doubtful. Do you need to maybe drill down to a lower time frame and then start hunting the principles that I'm trying to teach you? Maybe you let that flush happen, let the bounce happen, then you draw your reload zones, and you're like, all right, I think I got a level to take a shot on right down in here. And then you notice there's 4 candles in a row that all stopped right in that reload zone. So you want to take your shot, maybe just off of, and maybe even that doji candle there, who knows. And then your risk now is basically to a break of that low. At least you have a quantifiable risk. So yet again, there's another really, really good illustration of the difference between price risk people that will just come in and buy against lows, especially on liquidity washes, versus information risk people that are like, okay, fine, this is a level, it's a liquidity pool, let's let it play itself out, let's hunt reload zones, and let's see whether we can get any way to sneak in off of this with a little bit more information that, yep, indeed, we've bottomed. Maybe you're like, okay, well, Brian, I can't really catch falling knives, so I need more information, and this is off of a 3-minute chart. Here comes the big fat W. All right, well, now, because I am a member of that National Association of W Lovers, now I've got a W to work with. So I'm going to buy here, and I'm going to risk to new lows. Well, whatever. That's not really, what am I trying to say here? There's a million different ways to play this game. I think it's critical, though, that your evolutionary process of a trader, it's very, very difficult to start your journey trying to be this person. This is a very, very difficult trade for new people to take. This is a much easier trade for new people to trading to try and hunt and try and execute off of. I don't know. Give me some feedback. Was that 5-10 minute lecture there on the difference between price risk traders and information risk traders? Did that help you at all? Anyone? Hey, there's TBG. He usually gives me some positive affirmations. Somebody told me that was worth the price of admission. How much did it cost to watch this? Now I have to figure out whether YouTube even is with me here. Hey, there's somebody. Lord Greengrass. Yep, really useful information. Thanks. Good. Well, there you go. I've done my job today. Hopefully that is a pretty good illustration. Certainly no guarantees that this is a bottom. I'm not saying that whatsoever. I'm just talking about how different traders approach the market. I mean, I suppose you could argue a reload zone hunter, maybe a waited for some sort of, that's an inside bar there. Who knows? You can see how this sharpshooter, they've already got their 2-to-1s hit. So they should be selling a portion of this. Interestingly enough, it's basically the Nebraska trade going the other direction. It's ironically enough almost identical. And stops at scratch on remaining and just see where the hell the wind blows you. So anyway, interesting view there. So in summary then, whether it be something like the Bitcoin ETF or whether it be something like Bitcoin itself, I think we're coming into levels that if you are a lower time frame trader and you have a plan and you have exactly what it is that you're looking for, I think that there is something developing down here. Also, too, you've noticed of late, they absolutely love to tank the market first thing Monday morning, late Friday afternoon. Maybe it's late, but typically first thing Monday morning, maybe even into Tuesday. And then mysteriously, you see some sort of rally come out of nowhere, like Wednesday, Thursday, then they top it out, and then Friday they start the dump again. And I think that has everything to do with these people. I think this market is over the top manipulated in our current environment. And I do believe that, how ironic, George Soros's minion is basically running the U.S. Treasury right now, which means that he basically has limitless deep pockets. He's even told everybody, hey, we're risk managers, which means that if you do something so stupid like going in and buying ZEC, wherever the hell this thing is, I mean, just out of curiosity, what do you think a risk manager's risk threshold? Let's keep it as simple as possible. What do you think a risk manager's level should be to be watching here? And then by definition, what does that mean risk-wise? I mean, the irony of it all is, when was the last time we saw a W on something like this? I'm kind of thinking like here. That's a W. You've got all these trapped bears in there that would love to get released. Obviously, that's some sort of key low. You've got all of these trap bears in here that would love to get released. And then, of course, if we just do really, really keep it simple, stupid, I suppose that's what that was there. But at any given point in time, we should expect 38.2s. So that is, where's TBG? There he is. Yeah, so that's what that event was right there. As risk managers, where do I actually see that somebody came in and said, you know what, it's down, but let's turn it around, let's take it back up? I'm kind of thinking that low, all these lows, there's a little bit of a low in there. That definitely is jumping out at me. There's 50% right there. And really, there's our most recent W. The irony of it all is, when this thing does eventually calm down and start coming back down to earth, this is definitely going to be a target in my eyes. We just do something like that. Actually, not resistance, support. Support. And support. And the irony of it all is that, what do you think the odds are that this is starting to get down into reload zones? Coming in and buying right there, well, that's insane. Unless, of course, you're sharpshooting lower time frame setups. But this has got noob written all over it. All over it. Just stinks of noob. So be careful with your hard-earned money, people, please. If we look at the broader crypto market, done some technical damage here as well, folks. One thing actually that jumped out at me about Bitcoin here before we move into that in earnest is you see, I was talking recently about how the moving averages pretty much the whole way up here. You can see we got to a point where they potentially were crossing and you get that kickback on that event. We had them potentially cross. Well, actually, they did cross bearish here, and we had a kickback into that event. Actually, just after that event. And then we ultimately resolved that through that election higher. I suppose if we go back over time, where are we here? So bullish, bearish. Notice, beg your pardon, there's bearish there. So dump into that cross, and then what do you see following it? The kickback. So I actually expect this to happen. So notice the cross bearish here and the kickback. Took a little while, but nonetheless, we did get sort of the check. Is that what I really wanted? Do I really want to be a bear? If we go back in time, this one here, you can see, well, actually, where do we go here? Bearish cross here, but we eventually had a kickback. Then we had another bearish cross here, then another kickback. Then we had a bullish cross here, a bit of a check, bit of a kickback. Anyway, the point I'm trying to make here is, unfortunately, it does look like we have the moving averages crossing bearishly here. Take about a half a miracle here to negate that. So they are going to cross here on this week's price action, which ironically enough to me actually says I should be expecting some sort of kickback. You can see the steepness of the 13 EMA. This is going to come screaming down here pretty fast. It does like to hug near-term price action. It's an exponential moving average. That's what they do. So I wouldn't be surprised that whatever the counter trend rally is, it probably is going to stall out against whatever that 13 EMA is there at that point. So there's another unfortunate little tell, a trending signal that we've got problems. Houston, we've got a problem. And of course, the irony of it all is that if we look back on previous cycles, you notice, I mean, this was a fairly polite double top, but after the 38.2 cross, boom, 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 boom. Well, I guess that's not shocking. I think the thing that bothers me the most about this particular bull, again, if you're that ICT guy fan, notice how this key low here wasn't taken out until way over here. Oh, that held like a brick wall. Also notice too, you could make the argument that this low here, that held in pretty darn good. Here, thinking maybe this cycle is more like this as the assets maturing. We went boom, right down into that low, then pulled back and then lost that low. Unfortunately, this doesn't even really set up like your ICT guy short setup 61.8. So the fact that we've taken out this low here, and remember last week I was like, they took it out. And then I went, oh, no, they didn't. I had to correct myself. But we've definitely broken through that low now. So structurally, this is no longer a bull. Sorry, folks. At best, I think we're thinking trading range. And it's a wild range. It's a megaphone type range, which does mean we could visit very easily the top end of the range again. But as I said earlier, I'll be watching really closely. If I did want to sell Bitcoins, I think any kind of signs of failure on dead cat bounces up into mountain man levels, I think that would be the ideal short trade location for me now. Not down here, that's for sure. So going back to the totals, lower highs and lower lows, obviously coming up into an important level here. I suppose with Zcash, Ztrash, how did that go? Remember Btrash? And Roger Ver, that was so funny. I remember that. Probably none of you remember that. Anyway, this total, these are real round numbers, so they're not exact. 891.26, 892. So we have broken the new lows here. Boo, hiss, hiss, boo. We also, it appears that we have a trend line, that low, confirmed by market structure. This is now a valid trend line and a pretty big one too. You can see how the market flirted with it. I don't really like people taking trades on initial first blushes of trend lines. And I think this is an exact reason why. Came back down, flirted with it again, closed below it. You can see how this candle tried to recapture it, but then finished weak. Then we opened up, we took another run up top here, and then finished somewhat tepid. And then this is, an inside bar, bull rammy. I think actually baby's body slightly. Oh yeah, no. Japanese would call this a harami. I'd call it a bull rammy because baby's feet are sticking outside of mommy's yaya. But are we starting to get like structural signals now below this trend line? If we are, that is a sell signal unto itself. Boo, hiss, hiss, boo. If we change that to a 4-hour, you can see we dipped, we rallied back up, we came back down, then we rallied up, then down, then up, sideways, 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 sideways. So this high here was 927.65. 926, 926, 930. All right. So the top is there to there to there to there. Yuck. So we do have a structural fail below this trend line. That's not a good sign. Boo, hiss, hiss, boo. I suppose. I don't know. Maybe we can see it over here. Let's see. Let's do a CO red scan. What's the breadth look like here? Are we seeing more advancing issues or more declining issues? Ouch. Ouch. Oh, Jesus. Ouch. Ouch. Hey, there's one that's up. It's a miracle. Hey, this thing's a total meme coin. So if it's rallying, that means crypto probably not doing anything. That's a bad sign. Hey, there's one that's up. That OMG. Still way off of where I bought it. Hey, look at that. We got a bit of a rally on this one. 20% move. Let's see what he looks like. Wow. No, this is a trap when these damn tails look like this. Because you notice, if we change this to a line chart, hey, where did the W's go? Not much to get excited about that one. Hey, there's one that's up. It's a miracle. I think you get the idea, though. Look at this. God, what a fucking train wreck. These cryptos, man, this is painful. So I think you get the idea that there's a hell of a lot more red on the screen than there is green right now. maybe you happen to be in one particular name that's running, and man, enjoy that run while it's running. Hell, even Donnie's names seem to be sort of squandering here. Remember a week or two ago, we had talked a little bit about bullish setups setting up off of that level, and there was a pretty nice rally there. If anything, I hate to say it, this almost looks like a megaphone here from this side. So, what's Don look like himself? Oh boy, what a mess. And his stock looks like shit. Holy fuck. What a train wreck. I was getting bullish right in here. I went and bought a bull call spread for 2027. So, really no great hurry to do anything. But wow, what a disaster. You'd think that he was like named in like an Epstein file or something, eh? Arr, arr, arr. And I'm so pleased to see that that thing, that story has not gone away. If anything, power to the people. It's about fucking time. Anyway, that looks absolutely disastrous. So, I tell you, ironically enough, I think I said this last week. The only one that looks half decent out of his world is his wife. So, still nothing to get excited about there, though. Hey, where the fuck's the bull, man? I suppose if you did want to take a shot off of her, you could go in and buy that bottom of hers. Maybe that's an Adam and Eve. I don't know. Where's that, David? But I suppose if you were a fan, maybe take a shot and just risk the W and see what happens. But you can see it's not a very happy crypto market out there, folks. I'm sorry. This is rather painful. So, are we getting structural fail signals here? And the way that I like to use this particular tool is I don't think, well, I certainly know I would never trade something like this, but just use it as sort of like your, all right, well, what's crypto feeling like? Is crypto happy right now? And of course, and I think that there is value in disconnecting Bitcoin because I think Bitcoin has been institutionalized, all that, securitized, blah, blah, blah. If you're interested in the venture cap part of this space, then I think you want to follow this kind of stuff because it sort of gives you the general tone of what the broader crypto market's sort of feeling right now. Interesting how we are still playing in that big fuck you candle. And my apologies for swearing, but I don't know any other way to describe that. And I think that this, of course, was a scandal. If anything, I'm a little surprised of late that we haven't heard more scandals. And if anything, this is the type of environment probably over the next 6 months where you're probably going to start hearing about the crypto scams and scandals and frauds and all that kind of stuff. The only reason why I feel as though the market can go higher into the spring is I do like that Benner cycle 26 pivot, and I do like the relative comparison of late 1940s Bretton Woods kind of events, probably in our near future. And unfortunately, there's a really nasty bout, like really bad inflation through 1946 and 1947. And I do believe that, I think a big reason why the venture cap part of this space has underperformed this particular cycle is simply because of the cost of money. And if money isn't free, then venture cap investors, they've really got to see signs of value before they go take a chance on investing money that they know that they have to pay pretty substantial interest. If you went out and took out even $1 million loan, then that means you have basically a $40,000 a year bill just to service that $1 million loan. No ifs, ands, buts about it. You got to come up with that money or else. So as a result, I think a lot of the projects that you've heard out of the crypto space through that whole kind of artificial economy that we went through there through the cooking the books to bail out the banks, which I definitely think that's what that was. Total market manipulation, yield curve control, the whole fucking thing. And then the sickness environment was a complete outlier. This is not normal economics whatsoever. And frankly speaking, I think the powers that be, they also panicked to a certain degree. And unfortunately, that created an investment environment that really wasn't normal. Um, the SBFs of the world, they all got stinking rich through that particular abnormal market state. In fact, if I remember correctly, it was like right here where Kevin, who was the gentleman who used to direct and produce the videos with me prior to Chris, he famously went in and bought bitcoins at like $3,000 here, and it like instantly zipped up to like 50, 60 G's. Um, but we're not in this kind of environment. We're not even remotely close to this type of world. Um, I wouldn't be surprised if there's a little bit more rate sort of forgiveness through here. But the interesting thing is that the banks themselves are tightening credit. I showed you that liquidity image you saw from the tweet. Sure hope that data set isn't lost. Thanks a lot, government, you jerks. Maybe it comes back when the federal government actually is back and producing data again. I don't know. But hopefully you can see from this image, where are we now versus where were we in the sickness and through pretty much the entire life cycle of Bitcoin, right? Because Bitcoin came to life here. You could make the argument that Bitcoin and crypto hasn't even really been through one of these relatively high interest rate environments. So we're kind of breaking new ground for the venture cap space right now for all of you, especially in crypto. Anyway, blah, blah, blah. What time is it? Well, it's getting on 1 o'clock. All right, so we should probably wind this up here pretty soon. Talked a little bit about Bitcoin itself and a little bit of macro. Tried to put high flyers du jour into I don't know what you call it, into place. I don't know, into perspective. Way too late to be a buyer. Yeah, if you're a lower time frame trader, great. Hunt trade setups. Live by the sword, die by the sword. You know how it goes. But ironically enough, we just randomly pull up on. Let's take a look at Sjord's Rune. This one was really, really popular a couple of years ago. Can't buy a friend now. How about this rare? I mean, not much there. How about FXS? That was a really popular one a year or two ago. How about Decentraland and Mana? Oh, I mean, where the hell's the bull? There is no bull. So, this is not an easy environment for Joe Sixpack. Try and make a buck. This is a very, very difficult environment. Sucks. I mean, I don't know if I can give you people value here over the next year. I mean, it's funny. Yeah, I've been through each of these cycles, right? Through that one, and now this one. And it's kind of funny. Like we do, last cycle was a really good analogy where I did a little crypto show. And about 6, 8 months into doing the crypto show, one of the show people said, "You know what, Brian? This is way too difficult. I'm going to come back when it's in easy mode." And the irony of it all is that you can see exactly when we go back into easy mode, and you hear Brian saying, get your skirt together. That's when you really want to be getting excited about this stuff. But that's over here. Sorry, folks. Sucks. Put this over here. Oh, I probably pasted it over there. Oh well, you get the idea. Go like that, go like that, I go like that, I go like that, and like that. So, not a hell of a lot of hurry. um, I don't know what else they really, if this is a crypto specific show, there's not a hell of a lot more for me to talk to you guys about.
Brian, you have like 2 questions and questions document.
There you go. Perfect. Thanks, Brian, for your weekly videos. Oh, well, you're welcome. Great Del Moody. There's that guy. What is he saying here? Oh boy, look at all this. As a former U.S. citizen, even though Roger attempted to pay all taxes that his XPA said were due, not long after Roger published his book. Yeah, that doesn't surprise. Hijacking Bitcoin, the IRS cooked up some bogus tax charges on him. Roger did have legitimate issues with how Bitcoin was being hijacked, but he made an ass out of himself in 2017 in that interview where he lost his cool. I don't think well, anyway. And good that you actually remember it. I bet you most people here in this space don't even remember that. And he wants to spread trade Melania and Trump. There's a bad joke in there somewhere. There's Mr. House. Mr. House is a very good circle jerker. If I was going to a circle jerk party, I'd want to have him beside me. He's probably got lots of Vaseline. He's got lots of tissues. He's probably got some good porn in his back pocket all ready to go. Oh boy. And Mr. House, you need to work on trading setups and talking to your fellow community about why and how you buy and where you risk to and where you're going to take profits. It's just my old man yelling at Bitcoin rants. All right. It is what it is. All right. Let's head on over to that Q&A document. I'll see what I can do. We've got about 20 minutes or so left here, and then I have to head off to the boy and make damn sure I give him an awesome afternoon. All right. Newsletters, YouTubes. AIs, Canvas, AMAs. There it is. Yeah, let's see what happens. Holy crap, I have so many tabs open. It's going to be such a pain in the butt to redo all this. All right. How many pages down do we go? All the way down here somewhere. Holy crap. What the hell's all this? 1020. All right. 1116. Here we go. Hi, Brian. Thank you so much for sharing your knowledge with us. I've learned a lot from you. When you have a moment, could you briefly explain your sine waves of the liquidity cycle? I'd also love to hear how you think they relate to Benner cycle. Yeah. Well, a sine wave is just pretty much a locked in function over time. Probably the easiest way for you to understand why that 4-year sine wave looks the way that it does. And it's remarkable. You go from one sort of talking head to the other. I mean, there's so many different cycles people like to follow. I was reading up on one gentleman who's really big on 3.5-year cycles. Oh, goodness. What do I want to show you here? I want to show you the site, and always fun to see whether I can get to what I want to show you here. Oh, have to log in again. I think they set up some sort of gatekeeper thing here to keep track of me on the site. Every time I use the site, I have to log in again. I just want to show you the really basic business cycle. The business cycle. So all economies basically move along this path. And it's about roughly 10 years in duration from trough to trough and peak to peak. Which means that you should see actually small cycles within this bigger cycle. And the small cycles actually just basically follow the big cycles. Also, too, I mean, you want a really, really in-depth look. I was even showing this to the level 3 class here recently. That's interesting. Oh yeah, here it is. Josh did just such a beautiful blog post. I don't know how long ago. Look at this. I mean, fuck, that's incredible. So you really want to get into cycles? Go grab this image. And as you can see, it's sort of like this is the economic cycle, and this is the business cycle within that broader 10-year economic cycle. And usually what happens is you sort of go from like extremes to extremes. So if you're just thinking about like the interest rate problem here is there are some people that believe that inflation is nothing more than a function of the velocity of money. Try and wrap your head around that one. And it does make sense to a certain degree that we have our biggest inflationary pressures when things like housing markets are being revalued. I think all assets on the entire investment spectrum all have their particular day in the sun. And that is sort of talking about this image. So for people who really want to get into cycles, there was actually a really, really cool publication, Notley's Notes, and then Trend and Cycle, where they actually pick apart exactly where we are on the business cycle and the economic cycle, and what should you be concentrating on given what part of the cycle that we're in. And you know what's interesting is short-term interest rates usually peak around somewhere around 4, 5, 6%. Obviously, and actually, yeah, you know, through Volcker's war on inflation, he had to take rates a lot higher, but that's typical. So if we go back to our image that we were talking off of there earlier, of course, always fun to find these damn things when I'm trying to do this. This image, hopefully you see that same sort of 4-year pattern. And of course, this is short-term interest rates. And notice, they topped them out around 5% there. Notice through, interestingly enough, into the great financial crisis, they topped rates out there around 4 or 5%. So if you go back to our trend and cycle, you can see exactly what you're supposed to be buying and what you're supposed to be selling, given where we are on that interest rate cycle. And if you think about it in simplest terms, I mean, just keep this as simple as possible. When short-term interest rates are high, keep in mind there are a lot of people in the marketplace that what they do is they just simply are middlemen. I mean, that's sadly how a lot of people in this particular industry make a living, is they're just middlemen, right? I think we can all agree to that. And of course, you could make the argument, well, I don't want to get off topic, but the point is that I want to show you, just to specifically answer this question. The yield curve, you could argue this is nothing more than a 3-dimensional, well, I guess 2-dimensional, look at the financial services industry. And remember, the Fed was taking rates up through George Bush's kind of stupid, manipulation of the market right there. So right here, you can see they've got interest rates pretty high, right? That's that 4 to 5% window. And this is the yield curve. So this is yields on loans going out over time. This is a measurement of the highest credit quality yields, the U.S. government, which is a bit of a laughable in itself, considering through the great financial crisis, I think the U.S. government was basically bankrupt. But anyway, the point being here that if we look at this image, financial services firms, what they do is they borrow on the short end. They're always constantly borrowing on the short end. And then they lend out to the public, car loans, mortgages, right? Fucking Donnie wants to push this out to 50 years now. That's a potion for disaster. But the point here is that if I'm borrowing on the short end, and remember, this is, here we go, Brian, off topic, right? This is right up top here. If I'm borrowing at the short end and I'm lending out to the public on the long end out here, am I making any money in that scenario? Anyone? Anyone? Is the person who asked this question even here? I doubt they are. No, thank you, Lucas. This is like TA. No, this isn't TA. This is fundamental analysis 101. How do economies work, right? Maybe we should have Ray Dalio on to talk to you about this, and you'll believe me a little bit more. And in this environment, is there any particular industry that's guaranteed to lose money? Yeah, the entire financial services industry is guaranteed to lose money. And you notice this is what we call inverted. And what did the stock market do following this inversion? Oh, shit. It just collapsed. Why? Because there's a lot of companies, financial services industries, insurance, right? All of them, home mortgages, car loans, all of these companies all guaranteed to lose money. So earnings per share goes down. When Wall Street sees negative earnings numbers, which way do stock prices go? Same thing over here. This was through the dot-com boom. There is your inverted. I have to borrow at the short end, and maybe I'm caught here. The car loans and, 10-year mortgages, whatever. But anything below there, I'm guaranteed to lose money if I'm in the financial services industry. So if the financial services industry sees this kind of scenario, right? And again, that's back up at the very top of our economic cycle. Is that this one? Nope, not that one. Anyway, whichever screen that was on. Over here, right? Up top here. Or, where's that funny little image? Right up here. It's the same thing. In a weird sort of way, by the Fed manipulating short-term interest rates, they're actually guaranteeing that a certain portion of the economy will lose money. And especially in the financial services industry, because those are the people that do things like IPOs and that do things like, hey, let's ramp this market up. Let's get buying stock, promoting stock. Well, no, we're all losing money right now, so I can't really tout great earning. All right, well, then let's just fire half of our back office to try and get us profitable again. All right, well, layoffs go up. Jobless, you ever see those images of people leaving the Wall Street firms with a legal box of their belongings on their desk, right? We have to go through that whole painful part of the cycle. So this is very normal. You can't fight this. This is just the way our economies work. We go from boom to bust, and there are people that actually make a living off of being invested in the exact correct sector given where we are on this cycle. It's normal. And hopefully you understand from this image why this happens. And the fascinating thing is when you go out to the public and you actually trying to, even Wall Street experts, like all the talking heads on CNBC, half of the time they can't explain this. It's quite remarkable, really. I mean, it's stunning how much information I give all of you. And I give this out to the internet and YouTube and stuff like this for free. And yet, nothing. Well, we got 44 people watching this video. Trying to make a positive difference in this world. I don't know. But watch what happens at the bottom of the market. All right, the Fed's freaking out. They're going to take interest rates down to zero. Now what does the financial services industry look like? Borrow at the short end? Lend at the long end? Oh, what a surprise. Stock market goes back up. And here, they did it here. Oh, what a surprise. Stock market goes up. So, if anything, what you have to be concerned about is what the fucking fuck have they done to us here? Where is the ebb and flow of this economy? Something's not right with this image, folks. Oh, well, you don't have to apologize, TBG. When I call on you directly and you don't answer, that's when you can apologize. So there is something seriously wrong with this image, which is scary. This is how economies normally work. Now, we had this sickness, right? So the sickness, they artificially took rates down. So we actually had a situation here where we were sort of stabilizing. Never went backwardized. And then all of a sudden, boom, take it to zero. So that just keeps inflating the bubble. And in this case, you should understand why the market went up here. Then over here, look at that. We've got inversion, right? And this is so bizarre how this played out because typically you wouldn't have the yield curve go inverted here. They let this just play, and what ended up happening? Inflation ended up going absolutely crazy through here. So you can see that inflation is starting to calm down here a little bit. I wouldn't necessarily call this a really healthy, normal, like stock market bull kind of scenario. I'm kind of feeling like this market's living on borrowed time. I mean, gee whiz, that's ugly as sin. I don't know what this has to look like when it resolves itself, but I can understand that financial services industry participants are making money in this environment. It's marginal. It's interesting how I've turned bond bullish here because what that would mean by definition is I expect the longer end of the curve, these interest rates to start falling. And it'll be interesting to see how the Fed keeps pace with the long end falling. Now, that may be a wrong assumption. I don't know. Um, it is interesting how even just right now, they've got rates down, I guess, around 4% here down in the States. So, in a weird sort of way, if we look at that, we're still up in this sort of danger zone here where the economy should be stalling out here. And as I had started off this conversation with all of you, showing you the liquidity and stuff, when we really want to get excited about the long side of the market is when they're taking rates really down. And it's at this point down in here, right? Third Fed easing, fourth Fed easing. That's when we should see that the financial services industry are absolutely guaranteed to make money. And we should step in on the buy side and get all excited about venture cap and the stock market. We're not there right now. Something's disconnected. I mean, I think we're sort of sitting like right here right now. And there needs to be some sort of crisis. I wouldn't be surprised if Trump comes out next year and says, all right, that was tariffs 1.0. Now we do tariffs 2.0. And we start the whole fucking, tariff crisis nonsense all over again. Anyway, I don't know. There could be a million different crises that will develop. But for us to actually get bullish and be thinking optimistic, we need to see this actually coming down appreciably. I don't know. Sure hope that helps answer that question. It's a tough question. But hopefully you can see that 4-year sine wave just off this trend and cycle image. And really, keep it as simple as possible. That's what this image is. Am I going to fight this sine wave? No. I don't think it's in your best interest to fight that sine wave. All right. I hope I addressed that question. If you asked that question, can you tell me whether that speaks to you in here so I can see later on? All right, number 2. Hi, Brian. I've been working through your point and figure lesson. Ooh, tough module. And I'm confused about the horizontal count methodology. I counted a consolidation coil on SOL box size 2, 3-box reversal. I identified the range with horizontal lines, counted only the boxes inside the range for each column, excluding boxes outside the range, and including the Wyckoff check column. My total count was 217 boxes. Following what I understood from your lesson, I calculated 217 boxes times 2 box equals 434. However, the price actually topped at 217. How do you know it's finished? You don't know whether it's finished or not. I would go, you know what I would have been, oh, maybe you did include it here. Let's see. It would have been nice had you had a chart in here. Okay. Yeah, I don't mind that. That's not bad. Yeah. If anything, what this says to me is that's a double bottom. And I don't know where you started this. Is that the beginning of SOL? Beautiful double bottom down here. You might have done a horizontal count off of this range alone. That probably projected that high there. But I don't mind you taking this entire range and think of this. That sure as hell to me looks like a bull flag. A to B, C to D, wherever the hell that is up there. I'd also suggest to you, why not do a horizontal count of all this in here? And that might also give you a number up in that 400 area. So I think you're assuming that it's done, but I don't see any signs of this being done here. So I would keep that 400 number in mind. Yeah, I don't see any reason. Oh, geez, there's a silly website again. I don't see any reason to say that horizontal count target can't get hit. Where the hell was that? Is that over here? Yeah, okay. I'm not gonna sugarcoat it. Point figure charting, this is tricky shit, man. I mean, it's not easy. But I think on balance, I don't see outlandish price action. And if anything, the fact that this topped out at exactly half suggests that actually that top was probably nothing more than just a midpoint consolidation. Remember, markets, they can never move in a straight line indefinitely. They have to reload. That's the whole point of that reload zone concept. I draw a nice little pretty picture here, but I have no idea how to do a drawing images here. So I don't think you're faulted in this. But if anything, what I'm seeing here, and when we looked at that price chart, is that it looks like we made it halfway to your destination. Did I apply the formula incorrectly? No, I added a couple other things that I would suggest you might want to do. Is there a step where you have the original count projection? But as I said, off of this, I think you probably could have done this. And my hunch is this range here actually gave you that target. And then this, notice that this is almost exactly half that size. So if anything, I think your entire range is you've taken two halves here, and this range here is the first half, and this entire range actually is A to B, C to D up top here. I like that thinking, and I don't see any reason why a Solana can't rally to new highs. I find it hard to believe that Tom Lee is really going to be that wrong. I think Eric Trump is an idiot. But at the same time, too, I think generally he's basically making market commentary of a bull market. Terrible timing, horrific timing. But at the same time, too, for everything that I can see, if this story has to do with proof of work, then no, that's off the table now. If this story has to do with POS and real world assets and tokenization of our economy, blah, 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 digital IDs for all of us. So we basically become slaves to the system. Oh, the 1%, the Rothschilds. Oh, they're going to so fucking love this digital ID shit. Oh, humanity's just absolutely screwed. But anyway, put it all, and then, I see somebody over there mentioning Trump. You really think that Trump is going to let that world liberty piece of shit actually just flounder here? No. Interesting. Somebody says, I love the digital age. Glass half empty, glass half full. And if anything, this is a beautiful commentary on our Western civilization and why I absolutely hate Vladimir Putin, absolutely hate Winnie the Pooh, and any other fucking totalitarian dictator you want to throw into the mix. We have the freedom to make our own choices and our own decisions. Jim, great that you love this. And I have no right whatsoever to step in and say that you're wrong. No right at all. This is the beauty of our Western civilization. And for God's sakes, anybody listening to this video, do not let these cocksuckers steal our freedoms of choice from under us. I actually think to a certain degree that the banksters don't like this totalitarian dictatorship kind of stuff. I mean, the irony of it all is that they put Adolf Hitler in power. And then the totalitarian dictator, once he got firmly established, told the banksters, fuck you. I'm not paying you any more money. And there's not a damn thing you can do about it. And oh, what a surprise. The Allies wouldn't make peace with Hitler. Why? Because the banksters wanted their fucking money back. It's really that simple, folks. So anyway, the point being here, um, I don't. Aside from all Brian's political rants and all that nonsense, I don't think you've done anything wrong here. I think you should appreciate though a move from like $40, $50, straight line move to 400, 500. I don't know. Does it make sense that this thing had a huge pop? And I think you could have done a horizontal count in here to paint that objective. Um, does it need some time to reload? And I mean, you can just imagine everybody and their brother. And I remember when this happened, right? Everybody and their brothers just absolutely fucking ridiculously bullish. Well, that means everybody's long. Well, that's got trouble. So, ebb and flow. I don't think you've done anything wrong here. The only thing I would say is I think you missed an opportunity for a horizontal count in here, and maybe come back to me and tell me what target this painted, because I think you're generally heading in the right direction. And I tell you, point and figure charting, um, it's probably you could actually make the argument that point and figure charting and things like chaos theory are actually directly intertwined. So I find it interesting when I do horizontal counts and then I draw my Foggenbaums off of this range. It would not surprise me that that is a Foggenbaum chaos theory level, and your 417 target, I think that you had, is also a chaos theory target. And also be interesting too to draw a chaos theory off of this, and that also paint some upside objectives and do a horizontal count of this range in here. That might also paint some upside objectives for you. All right, so hopefully I've given you some stuff to think about here. I think generally speaking, you're heading in a good direction. I'm not going to label myself as a point and figure charting expert. Point and figure charting is tricky. It's tricky. If anything, whoever asked this question, I would actually maybe touch base with me, Laz, and let's see if I can hook you up with some more point and figure resources and references. I know a few people that do like point and figure trading a lot, and see if we can get you really dialed into this. To be honest with you, I haven't taught the level 2 program in probably about 5 years now. So I would say I'm probably very rusty when it comes to point and figure, just to be perfectly honest with you. Yeah, I mean, unfortunately, the language that point and figure charting uses is exactly opposite to like price chart people. So my apologies there if you're confused. This is also very similar to like harmonics, where a bullish harmonic probably has a big fat M staring you in the face. And you're like, what the hell? So, I can understand that you're going to be a bit confused. That was very introductory module. And if you'd like to go further down that rabbit hole, I'm more than happy to give you a bunch of resources. Stockcharts.com people, they love point and figure. They have great tutorials on it. There's one other guy that I used to do a lot of point and figure charting with. So reach out to me and I'll see if I can hook you up with some resources. Do I have enough time to go through the entire point and figure lesson here with you in this? I got to be out of here in like 5 minutes. I think that's about the best I can leave you with here. The fundamental difference in how point and figure interprets these patterns versus traditional candle chart pattern, well, the bottom line is they're very, very different. Point and figure charting people, they have very specific language. Obviously, candlestick chart people, I mean, hell, the Japanese, they didn't know anything about point and figure charting. So you're kind of comparing apples and oranges here. And unfortunately, my education, teaching about price structure, obviously that is adding down the candlestick pattern, people. So you're going to have to relearn some terminology if you really want to get jazzed about point and figure charting. All right, last question, then I better get out of here. Hi, Brian. What's your opinion knowledge on the defense industry? Was looking at defense stocks and this Rhine metal. I think that's how you spell it when horizontally up like a shitcoin. Did a quick bit of research and apparently the founder is a target uh, for some or others. Cheers, Brian. Yeah. Oh, is that little defense stock that I bought? The only reason why I took a position in it was because they did a pretty big financing, and I'm just simply riding the coattails of that financing. I wanted to specifically be long from that number. Where was that? Was that over here? I don't know whether this is the stock you're talking about. You're talking about Nuke? So they just did a financing deal. It was a convertible debenture, which isn't really the ideal scenario I'd prefer to see. But I did like the range here. And yeah, you could argue these venture cap stocks are very much like shitcoins. But the fact that, this would be like if Eric Trump had come out and said, I just bought $1 billion worth of Ethereum. I mean, you saw what happened when, Allen came out and said, I bought $1 billion worth of this stock. I think around 200 or something like that. The damn thing doubled. So this is nothing more than a big smart money player came in. They did a convertible debenture, which isn't the best. So, but they came in, and I like to buy cheap stock down at the bottom end of ranges. I am more than happy to sit on that. And all I'm doing, I don't know whether this is specifically your question or whether you're looking at a different asset, but all I'm thinking here is can we get a rally back into TBG's zone? If that's the case, then I knock the cover off the ball on this trade. Am I expecting it to happen tomorrow? No. Am I even touting this as a technical breakout, technical buy? No, not really. If anything, I think that this thing becomes a technical buy, and my commentary for the site was as soon as I get W's on the other sides of trend lines like this, then I'll start looking to add. The only reason why I took a nibble here was because it was one hell of a trade location and it was basically at the financing level. So I'm happy to be long where they are. And I'll think about adding this if I actually do start getting actual reasons to justify getting more bullish, i.e., can I see some bullish divergence? And then can I see some W's in price? So I don't know whether that's specifically with regard to that stock. Am I going to call this a blue chip stock? No. What I am going to say is they just went in, they did a financing, they have a plan, make themselves the next best aerospace company, blah, blah, blah. Not really anything jumping out at me from like earnings wise just yet. Nice low share count. Insiders are long a ton. And I kind of think it's cheap. Am I touting it? Remember, I will tell all of you what I'm doing with my money. Is there a very realistic possibility that I could sit underwater on something like this for a while? Absolutely. Am I telling you to go and buy this? Absolutely not. I'm just telling you what I'm doing with my money. I think that this is cheap. So I went and picked up a whack of it. Looks like I'm underwater now, so obviously that Beamish guy ain't too smart. I don't know whether that's specifically your question here. Do I like the defense industry? Yeah, unfortunately, especially with Donnie at the helm. He's basically trying to convince the world to start buying killing machines again. I think through the late 1990s, with the end of the Cold War, I think a lot of people in the West were kind of like, okay, that's that old civilization. Let's move on to a new civilization. Maybe not so much war, maybe not so much spending on murdering machines. I think Vladimir Putin has done a really, really good job in reversing that positive karmic experience for the human species. So thank you very much, Vladdy, you asshole. Um, I is this part of the entire world cabal? 1%? I actually don't think so. I think they would prefer that we actually get rid of these totalitarian dictators so that they can create that global world order, global government, all that shit, which kind of puts away that you could even argue that nation states right now are trying desperately to hold on to nation state status, and the global elite are trying to undermine that nation state status. And I think you could make an argument to a certain degree that Vladdy here is trying desperately to break that move towards a global community, if you will. I think, of course, this plays very well into the Americans' hands as sort of the military industrial complex parts supplier for this world, and more death and more murdering around the world is good for business. Does this spill over into some sort of global nuclear Armageddon? I actually think that there's a very high probability that that does happen over the next 10, 15 years. We're right on the edge here. In the near term, with this sort of environment, I think people who are coming to market to get financing for military industrial complex, I think they're going to fall on friendly ears now. I think Wall Street's going to be more conducive to funding for this industry. So, ironically enough, I think to a certain degree it is a growth industry, and I would argue if you can get behind what really scares me is robot parts manufacturers. I think that will be a huge growth industry. Obviously, drone technology, huge growth industry, and the integration of these. What's scary is Alan's talking about putting AI, the Gronk thing, into his army of Tesla robots. Oh fuck! It's got Terminator written all over it, and I don't know why the rest of society can't see this. Oh well. I've already put in 55 years, so if my time is up here fairly soon, I can say that I lived longer than the average human. But man, from my perspective, this has just got disaster written all over it. So I don't mind, and frankly speaking, I think this is like when in Rome, do as the Romans do. Holy shit, look what time it is. All right, so on that crazy ass rant, I got to get out of here. Have yourselves a great rest of your day. PMA for the win. Slow and steady wins the race. Try and not take any wooden nickels in the marketplace. If you did ask a question here and I didn't answer to your liking, just DM me. Well, not liking. I don't know. There's like or dislike. But if you had any follow up or anything like that, especially Laz here, let's see if I can hook you up with some more point and figure resources to help you understand this a little bit better. And did you read Duplessis's book that I share with all of you? Because the answers are probably buried in there. But anyway. Okay, I think we'll leave it at that. Slow and steady wins a race. PMA for the win. Try not to take no wooden nickels. Did we have our ABC target finally hit here? 93,535. We hit it. Ding, 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 ding. So if you're a botter, You're feeling pretty damn happy here. All right, folks. Well, we got location now. So now we've got Willie Stupid. Can we get a confirmed divergence now? Come on, baby. You can do it. I also think IBIT is at its harmonic objective. So now we need to start seeing confirmed divergences. Once we get that, then I think we're probably, the light is near the end of the tunnel here for the next little while in the market. All right, everybody, all the best. Wish us best of luck on the roads, Lily and I. And the only left thing to say to you, like TBG says, is bye.